Hi, nice to see so many of you. Sorry there's not enough chairs, but thank you so much for coming. Today, we're going to be speaking to you about something that we've never spoken about before, a new concept, but there's a disclaimer. Most of us at some point have charged by the hour because it's safe and what is known and what most prospects say at the beginning of the call, how much do you charge by the hour? But today, we want to talk to you about a different concept, but this might not be for all of you, and that's okay. So listen up, buckle in, and we'll get going.
Yeah, and let's have a chat about it afterwards. Like, come and tell us what you think. Come and tell us whether you agree or you think this could work for you, or just your general feedback. So what we're going to cover in this session is the evolution of pricing. So where have we been with pricing so far? Where are we right now? What is the problem with the pricing that we're trying to use in this profession, and how can we change that? We're going to talk about how businesses outside of our industry approach pricing, and then what we can learn about that so that we can commercially price bookkeeping.
So I'm going to take you back and tell you a story. Back in 2016, I had a phone call. I just started a practice, and an accountant I knew said that he knew of a business that needed help with 3 months of bank reconciliations. Would I be able to go in, do the bank rec, and leave? So I said, absolutely, that's fine. So I charged them my hourly rate of £35 an hour, and I went into the offices and I started working my way through their desktop bank reconciliation. But very quickly, what I realised was that the outstanding bank rec was the least of their problems. There was systematic problems throughout the whole business that I could see, and the fact that when I got there, they had to phone up a certain company and buy an extra license and then buy me an extra computer just so that I could do the bank rec was one of the issues. I thought, if we're in the cloud, this might have been a bit easier. So I worked with them for a good couple of years. But what I did was I put forward to them a proposal. I said, look, I'm working with you now. I can do the bank rec. The bank rec will be done. But what I've noticed is that you're invoicing after you've put up a marquee and after you've spent all this money. I could bring in a new proposal system so that people pay 50% up front on booking and the other 50% before you set foot on the ground and start using and spending all that money. I said to them that I could help them with moving their finances into the cloud. So I put forward a proposal. They made me their finance director, but then they paid me the £35 an hour, but as a salary. Now, it wasn't a bad salary. It was a good salary. But over those 2 years, with my help, with my guidance, we transformed so many things in that business that it meant that when I joined, they were breaking even. After year 1, they made £400,000 net profit, and after year 2, they made £600,000 of net profit. That's £1 million that I helped with. But they saw me as a cost. They didn't see me as an investment. I was another bottom on a seat, time for money exchange, which didn't feel great for me. And it got us thinking about what if I'd have been reimbursed differently for that role.
I wonder what would have happened if you were an investment for that company instead. I was speaking to somebody yesterday, and he was looking for a finance director for his business, but he said, it's expensive to have a finance director for my business, and it's fine, I could just spend a few hours a week doing this role. Why would I spend money on somebody if I know how to do it? And I'm like, you're seeing this in completely the wrong way. Mm-hmm. So we want to talk about how we can change the view of the bookkeeper or accountant into an investment conversation rather than a cost conversation. I want to talk to you about the evolution of pricing so far in this industry, because Joe and I have been here for years talking about the hourly rate and why your hourly rate isn't enough, and we can talk about that all day. But I think most of us are quite comfortable with the idea of charging an hourly rate, because if we've been employees at some point in the past, we're used to being paid a rate in exchange for an hour of our time. That is traditionally how this industry is set up. Something that has revolutionized pricing in this industry is volume pricing. So this is transaction pricing. This is where if you know what the going rate is in the industry for a particular type of transaction, you can multiply the volume of transactions by the price of the transaction, and you can work out a fee that isn't anything to do with the time that it takes. And this is crucial because if you look around you, everyone in here has some kind of automation or AI that is promising to make everything faster for you. So we need to be able to make sure that it doesn't matter, that isn't going to actually impact what we're charging our clients. But the problem with these two systems is that under hourly rate pricing, it's actually the bookkeeper who takes the longest to do the work who is the bookkeeper that earns the most. And that's really difficult when we're trying to automate and systemize the work that we do. Under volume pricing, the challenge with this is you can go in and automate it, but then when you start saying to your client, I need you to use this new app that's going to make everything faster for me, like let's log you into Dext or Apron, and you're going to start taking photos of your own paperwork, and we're going to get this automatically sent and published into Xero. The client's like, well, why am I charged? Why have you not reduced your fee? It's so much faster for you to do this work. So we still feel really trapped and stuck.
It's the person that has the most volume, the most amount of transactions is going to earn the most. It's not based on anything else. It's, again, about an exchange of time or amount of transactions.
It's a proxy. It's always about like a number of something, doing a number of tasks.
Yes.
Right. So let's talk about some of the ways that pricing happens in other industries. Have you used a holiday booking website or app or something like that? I mainly spend most of my evenings scrolling through apps like this. I was having a look for a holiday lately and I came across this one and I thought, oh, that looks like a nice little holiday. Maybe we could try and book something like this year. And I looked at the price and I was like, oh, £992 per person. Do I love my kids that much? I don't know. It feels like it's a bit out of my budget for this year. But then when I noticed that this holiday actually at the moment is a great deal because it's got 35% off, because it actually normally is £1,518 per person. Suddenly, I'm not comparing it to other £992 holidays. I'm comparing this to other £1,500 holidays. I'm like, but I can get that now for £900, and it suddenly feels like a much better deal. This is called price anchoring. This is where you say, this is what this is worth, but you're going to pay me this. Yeah. Oh, is this me? Yeah. This is a me one. Yeah. Great news. Oh my gosh, we had you. This inside our life, us deciding how to explain this is going to be a lot of fun.
We had so much chats about popcorn.
If you go to the cinema, you are usually faced with a selection of popcorn meal deals, right? You can have the small popcorn, it comes with a drink, or you can pay more and you can have the large popcorn with a drink. And I don't know about you, but usually I look at that and I think, do you know what? I love the idea of the massive popcorn, but I'm going to feel pretty gross when I've eaten that much. I'm probably quite thirsty. I'm just going to go with a small one. It's only $4.99. That will be absolutely fine for me. But when you are at the popcorn stand, if you can picture yourself there, they probably don't have two options. They probably actually have a third option. There's a deal B in the middle. And if they actually present me with this selection where there's something in the middle, I'm going to start comparing the price of deal C versus deal B and actually how much popcorn do I really want to have. And I'll be like, oh, well, I might say, oh, well, I won't go for the large one because that feels really greedy, but the medium one, that's okay. Whereas you said to me, we were also saying, like, maybe you might say, oh, well, it's only £3 more to have the massive deal. Maybe I just get the massive deal.
It messes with your mind.
But what it does is it means that there is no situation there where I choose the small, because I'm straight away comparing and I'm thinking about the other prices. So this is the decoy effect. This is where a third option is put in there that with the point of trying to push you to choose one of the other packages.
And then we got something that we all very well know about, like software, this commitment pricing, where when you go onto a page to buy software, it tells you a monthly fee, but then you realise that's the monthly fee if you buy a whole year now, and it's smaller, and then you start comparing, well, do I pay for the whole year now, or do I pay for it monthly and it's going to cost me more? So that is a price that you're being rewarded for committing to a longer term. So that's commitment pricing. And then we all see the fast action bonuses, the sales we know are never ending. because they're always ending and they're always there. But still, sometimes when the time you see the advert for the sofa that you really like and it says it's ending on Bank Holiday Monday, you think maybe this Bank Holiday Monday it's going to end. So I must buy the sofa now. And also they're playing with, they will up the prices of certain sofas and drop them down and do all of these things. So this is rewarding you for taking fast action.
But it is just psychology. Every industry has its own particular way of pricing. We all get the popcorn thing because all cinemas are doing it. We've all seen that software commitment pricing playing out when we've been buying Calendly or, one of those apps that you're plugging into your business. It's just, I like to think of it, it's a bit of a game. Mm-hmm. It's just the standard way of pricing.
Yeah.
And we are in our industry so used to pricing in certain ways that we just don't think about how we're going to apply this into our own business. But in the bookkeeping and accounting space, something that's happened recently, you will have seen it, is we start, and hopefully lots of you are using this or planning to move over to this. We talk about value pricing a lot. Mm-hmm. Value pricing is where you decide, this is the value of the service that I'm going to offer to you, and this is the price of it. The price is linked to the value. The price is not linked to the number of transactions or the volume or the amount of time that I'm going to take doing this. But the problem is, it's very difficult to justify because we are really data-driven numbers people, and we want to, as finance people, put things in a spreadsheet and spit out a number that explains to our client exactly why that's what the price is. In our community of bookkeepers, the Six Figure Bookkeepers Club, we talk about something that we call the gold standard service. And this is about the best service you could ever offer your client. If money was no object, if your client was paying you really well, you were earning what you needed to earn or what you wanted to earn, and you could go out and do the best job for your client, what would you include in this gold standard service so that you could justify the highest fee that your client would be prepared to pay?
I was talking to someone today about the fact that, with the software that we have available, we're talking about Dext and how you can add things like documents in there, like insurance documents. And imagine just having your client's insurance documents stored there and being able to say to them, do you know that this insurance is about to auto-renew? And if we do some research, we might be able to bring that number down. Like, what can you do? Not what you've been trained to do, but what are the other things that the numbers are right in front of us we have access to that could really help somebody? Reviewing direct debits and making sure that you're not double paying for things, or that the user amount of numbers are being utilised by the business, or there are so many things. Do you want to know how many Instagram followers you've got, or how many people are on your email list? I can come up with all of these numbers to help you manage your business. When you start thinking about all those little things, I like to play the game. If someone was going to pay you £20,000 a month, sit down and write down everything you could physically do for them and really open your mind. Because I think sometimes when we approach this, we think, what will someone pay for it? Not what could we potentially do for them.
Nice. So I'm going to let you do this, Joe. Let's talk through how we might price this. This is value pricing in action with a gold standard service.
Yeah, so we go through this model where if you imagine you had 40 hours per week, you decide how many hours a week you're working. 46 weeks per year, assuming you have some holiday, maybe some sick leave, maybe some school holidays or something. And then if you are 75% chargeable, that means that 25% of your time you are spent working on the strategy, the sales, the marketing, maybe doing AML, all the things that you can't charge for. So that leaves you with 26 chargeable hours per week.
That's in a 52-week year, just because every time I look at that, I think that number's wrong.
Yeah,
it's my fault.
And then we think about, okay, so if the 26 hours a week, and I was going to offer this gold standard that we spoke about, this really amazing service, the best you can do, how many clients could you look after in reality to give them that best service? It all depends. It depends on automation, it depends on team, but we're really looking at like a sole practitioner. What could you do? We think you mostly have the headspace for 6 clients to really give them that expert service. And you would hope to be taking home at least £50,000 a year if you're trying to swap a job for an income. Then we would say £50,000 is a good starting point for that, and then we need to add back some overhead and tax. So the turnover would need to be about £65,000 to get there. So you need to build a package. If you divide that by the 12 months and divide it by the 6 clients, that amazing package is £900 a month. Now, some people here will be like, that's too much, no one's going to pay me £900. Other people are like, well, I mean, I had some clients that would pay me well over £2,000 a month.
Yeah.
This is where we talk about ideal client, finding the right match, the people that you're going to be like work really well with, and you can have the most kind of impact on. You can find people, definitely, you could find 6 clients to do that if you built up this package. But like I say, this is not for everybody, and the gold standard service is the same.
Yeah, and I think that, again, we go back to the point that it's difficult to justify when someone says to you, well, what do I get for my £900? Because we're so used to listing out the things that we're going to be doing for the £900. But what we like to think is, if your client, what's the alternative to your client? So they bring you in, you do this really great service for them, you really help them achieve their financial goals, they pay you £900 a month to do that. The alternative to them is to get in an employed bookkeeper or accountant. Now, could you bring in what caliber of bookkeeper or accountant could you bring in on payroll to work for you for £900 a month, who could give you what we're describing, this gold standard service, this FD level support, being their like right-hand person on the numbers, involved in their KPIs, understands their business, wants them to achieve the same success that they're hoping for. Mm-hmm. It's not even a conversation. But we never talk about that.
No, and then you think about the pension costs and the sick leave and the training and the new computer you've got to buy them and the space they take up in the office. What we offer as self-employed practice owners is an amazing opportunity for those business owners.
So we find it very difficult to justify a price. This is what we want to do. This is why we find pricing so difficult. I haven't changed the slides.
That's okay. So what if we could talk to you about something that was a win for you? You earn the money for the value you are sharing, but the client also knows that you're not in it just for that invoice, that you're actually part of the team and you want that business to win too. It's a win-win situation.
So let's talk to you about pricing for impact. What we feel is the future, the evolution from value pricing, is that we are able to tie in a fee that represents the going rate for a bookkeeper or accountant with the level of skill that you have, the experience you have, the expertise you have, and there's a way that you can benchmark that in some way, like what is the going rate. So I think we all have a sort of feel of how we work out what that is. But then also what we do is we have a commission-based, is probably the best way to describe it, fee tied to financial outcomes for the client. So if the client wins, if the client achieves that financial objective they have, and you're part of making that happen, you are remunerated to reflect the work that you've been involved in doing that.
Mm-hmm.
When I was 19, I needed to get some office work experience before I became a trainee accountant, and I decided to become an estate agent. So my job was I was a Saturday girl. And I worked in an estate agent's in Dorchester. We had lots of different properties on our books, and my job was to go through... one of the more senior sales progressors might come to me and say, Zoe, on Saturday, what I want you to do is see if you can get some people around this 4-bedroom house in the countryside. So what I would do is I'd go through my list of prospects. I'd have this massive database with names of clients, what they were looking for, because it was in the days. I'm in my 40s, so it was a long time ago. It wasn't really a right move thing. We used to send mail outs to people with properties, but I would have a list of people and their phone numbers because they'd come into the office to register that they were looking for a certain type of house. So I'd go through the database and I would find people who were looking for a detached 4-bedroom house in the countryside with a garden and a parking space or a garage or whatever. And then I would ring up clients who were usually really annoyed that I was ringing them on a Saturday morning when they were trying to have their breakfast. And I'd say, oh, great news, it's Zoe from the estate agents. We've just got this property on the books and oh, you'll love it. I mean, I'd often never even been around it at this point. But I think you're going to love it because it looks like this. I know you're looking for this, this and this. So I was just talking to them about what they'd already told us, and I was saying, this is the solution for you. Let me take you around, and I'd try and get them around this at that weekend. Now, as an estate agent, my job was to sell houses, but it didn't matter how long I spent selling the house. In fact, it was best if I was to spend my Saturday morning calling the right people and get the right person through the door and convince that one person that this was their dream house, so they would put in an offer, the best offer I can get out of them, so that I can sell the house on Saturday. Because if I can sell that one house on Saturday morning, in the afternoon I can focus on selling a different house. I wasn't paid by the number of hours that I was spending going to that house. I was actually paid a base fee, a salary that reflected my skills and expertise, not very many. And then what I also got was a percentage, a very tiny percentage of the commission that the estate agency was paid when they completed on the sale of that house. Because if you've ever sold a house or not bought a house, if you've ever sold a house, you will know that the estate agent is usually going to charge you a percentage of the sale price. So the more I could sell the house for, the better the return for me and my little tiny cut of the profit that the person was making. So when we think about the way estate agents do this, or any other commission-based industry, if I was to charge as an estate agent by the hour, that would be crazy. No one's going to be happy if it takes me months and months and months to sell their house because I'm billing them by the hour. They want to sell the house as soon as possible. They're also not interested in me billing them by volume because they don't want me to say I've got 40 viewings for you. They want me to say I've got 5 really good viewings for you. As much as it sounds great when you say I've got loads of viewings this weekend, actually what really matters is you're getting the right people through the door and not wasting the time. So this is a combination of value pricing and impact pricing.
Have you ever been to a cafe or coffee shop, walked in thinking you're going to sit there and set up your laptop or something, but everything's dirty, it's sticky, and you're like, I'm going to get the takeaway to go, I don't want to spend any time there. But then think about going into a lovely coffee shop and you sit there and you might, I might stay for a bit of lunch, or I'll have a muffin and I'll have a coffee, and you spend more time there and you spend more money there. And what if that barista, waitress was actually given a flat fee for the hours that they were there, but then incentivized for the profit that was made that day and they would then improve the environment and actually impact the bottom line.
Yeah, I think if you think of this as if you're the employer or if you're the person who is paying the fee for the service, you're going to value more the one that has more return on investment, and you're going to get more return on investment on your barista who is able to get your customers to stick around for longer and make it a happier environment. They might stay for an extra cup of coffee, or they might stick around for lunch. But if it's filthy and they just leave, you've lost all potential of adding to that transaction value. And businesses, all businesses, your business, your clients' businesses, you're all tracking some kind of KPI, key performance indicator. You might not be doing it formally, but there will be something that you measure your performance by, even if it's just something that's in your mind, that like, how many sales have I made, or what's the value of my sales I've made this week, or
how much money's in my bank.
How much money's in the bank? What's the average transaction value? You know, that coffee shop, they're interested in getting people to spend more and more money. That's why they try and upsell you. I worked in Boots as a teenager as well, and my job was to sell things. Hey, you've got a cold. Why don't you buy some tissues at the same time? Like, literally, their job is to get you to spend more money. It might be your rating, customer satisfaction rating, or it might be that you're looking at your profit margin or your turnover, or if your client has several offices or stores, they might be actually benchmarking them against each other based on those particular KPIs. So there are things that the businesses you're working with are trying to achieve, and we have the data and we have the power to actually make suggestions to our clients as a kind of business partner to help them achieve this stuff.
Absolutely. We can sit at the table with them, and even collecting this data on their behalf and sitting down and reviewing it with them is of benefit. I think we sometimes underestimate the power of accountability that our clients could really do with, because they just don't have the time or inclination. And if we just sit down with them and say, do you know that this is your TripAdvisor rating, or these are your Google ratings, or anything like this, all of this information is like pure gold.
So we're talking here with impact pricing, we're talking about having a base monthly fee and then adding a KPI-linked fee, a commission based on impact that you're making for the business, something that's measurable and tangible and tied to what the customer, the client, cares about as well. Mm-hmm. That's when they're going to see you as an investment rather than a cost.
And who would you prefer to be sitting with? Like, if you were a business owner, do you want someone in your team that you just see as a cost that turns up, does the numbers and doesn't really talk to you? Or would you like a business partner sitting at the table that is just as motivated as you are to improve this business, improve the profit, improve the whole culture of the business, so that you as the business owner benefit? But like I said, it becomes a win-win, and you do become a business partner.
Yeah. I love in this picture that she's in my mind, she's the bookkeeper, right? And she's just looking at the numbers and everyone's like, oh my gosh, you know so much, you're amazing.
Like, we love you.
But we do know so much, and we can be amazing. We just don't talk about it enough half the time.
This is the thing. With our industry and lots of personalities, we have the Six-Figure Bookkeepers Club. We know that from all of those members that lots of you are quieter. You like to be behind the computer, and to present yourself and say, I'd like to come into this business and help you achieve your financial goals. I'm going to do the finances, but I want to sit at the table and go through KPIs and be paid as per those KPIs. May be a difficult conversation, but there will be some of you here that think, yeah, I can do that. And like we said, this might not be for everyone, but we're just presenting this today as an idea, because I think we all agree that the hourly rate is not fit for purpose in this world of software and AI, and we need to keep talking about new possibilities, and that's what we're doing today.
Yeah, I think sometimes when we say KPIs, it feels like I don't know, this big, scary, extra level of thing that we need to be offering. But when we're talking to our community about conversations with clients, or like a prospect call, for example, if the starting point is for you to just ask your client to tell you, like, why did they start their business?
Yeah.
Well, what's going on for you right now? What's keeping you up at night? What do you think someone like me might be able to help you with? Those are the questions that are going to start the conversation, where you can show, okay, I get it, I care, I'm interested in this. It is that, like, I almost feel like it's a bit of a friendship, Joe.
Yeah, and that's why it's really important to choose the right clients that you can have that kind of relationship with, because, again, not every relationship, it is relationship based, and I think we have to move more into that in this time of software and technology.
Yeah. So this isn't for everybody. It's not going to be for you if you are, not interested in reporting. You know, if you're happy to stick with the transaction processing, then fine. That's okay. There are lots of businesses who need that. But if you're happy to start reporting on profits, and I think actually lots of bookkeepers are producing reporting at the end of the month, but maybe not taking that extra step where there's a conversation about it.
Yeah.
So if you're ready to start having a conversation with your client about the reports you can see, just saying what you see.
It's like catchphrase. So we see.
but not feeling like intimidated. Like I feel like this can be so much more straightforward than we think it.
I think we always assume that when I started calling myself a finance director, I assumed that there was another language or something, but actually really wasn't. It's like, would you like me to review your bank transactions and check that you're paying things by direct debit, or you're not duplicating things? It's not anything difficult.
No.
It's just making that space and sitting down and talking about it. And I think we overcomplicate it.
Yeah. If you're someone who avoids hard conversations when the numbers are bad, I'm guilty of this. I've had a client who was constantly in their overdraft, always worried about paying their next back bill or paying their payroll. I tried to help them with cash flow forecasting, but I wasn't prepared to say, hey, we've really got to make some decisions here. And I think if I had the confidence to do that, I could have really helped that client get beyond that situation.
And that's the reality. If you're going to become a business partner, things could be good, and things could go bad. So you're going to have to be open up, like, are you are you willing to take that and really be a business partner? And yeah, I think we do need to think about it, and that's why we think about that base fee first, and then that extra bit on top.
And if you want to stick doing what you've always done, that's okay too. But just know that pricing is evolving, and you might get stuck with some of those challenges we've spoken about hourly rate trap or volume pricing trap, particularly when you're trying to justify to your clients that they are going to benefit from a piece of software. When you care about the numbers, your clients are going to see you differently. We want them to see you as this person in the team who is on their side, because it's lonely running a business.
Yeah.
You want to be able to talk about those things that are keeping you up at night, the things that you're worrying about, and finance is usually one of them.
100%.
We support an amazing community of bookkeepers with pricing. This is one of the conversations we'd love to continue with you. We actually do have a pricing spreadsheet that you're very welcome to download. If you follow that QR code, you'll see some information about the Bookkeepers Collective. Book a call in with us if you like. If you have a look on the website, you'll find that spreadsheet as well. In our pricing collection, we also go through multiple different methods of approaching your pricing, which could be quite useful just to see, well, how would this fee look if I was pricing by the hour, or pricing by transaction, or pricing by value, like that conversation we had about the gold standard and how we might get to that £900. You're very welcome to go and see what we're all about. But thank you. We'd love to take some questions.
I've been following your fixed fee for a while, as you know. Year on year, how do you deal with price increases on a general level?
With regards to pricing reviews and price increases, I think you need to set out your store in your marketing, in your sales call, in your discovery call. When you're talking to people, you need to explain to them that the price I give you today will change. We're in an ever-changing market, and you explain how you're going to be reviewing. So depending on your pricing methodology, you need to explain to them at the beginning, this is how my price, this is the price now, but I will be reviewing I used to do monthly for payroll, quarterly for bookkeeping, and annually for year-end accounts. And I told them that there, and then every quarter I would book in the meeting to have the review, and at that point was a great point to discuss whether transactions have picked up or gone down, if income's gone up, what's going on, and it was like a whole strategy meeting, but we discussed the price of the services as well at that time. It's about being open and honest. That's the problem. When you say, I'm charging I'm charging you this by the hour, which seems like this hourly rate seems really nice and easy, but then your prices go up, your costs go up, and then you start getting quicker and quicker, and so the price is going down, and then you don't want to even up your hourly rate. That's still difficult. When you say an hourly rate, it seems really definite, whereas when you're pricing in other ways, you're saying there's moving parts, and I'm going to be reviewing this regularly.
And then on top of that, as your prices go up, the prices of your software, the prices of running your business in general, are you then doing like a regular, say, 5% increase every year just to account for those things?
Absolutely.
Or are you just absorbing those into your reviews?
For me, how I was looking at it was I would review the cost per client and make sure that there was the right profit percentage on top of that. So it depends. And if the costs are increasing, but your business, your costs might be increasing, but if you've got more clients, then your costs might go down for certain things. So it's constantly, we need to look after our own businesses as if we're our best client. That gold standard service, the first thing you need to do is do it for yourself and figure out all the things you can do and look after yourself first.
Hi, how are you tackling the pricing for MTD for IT?
Great question.
Brilliant question.
We are getting asked this so much. And we were having a chat this week with somebody, and she'd come up with the methodology, and we were like, you're going to have to go for it in this way, but you think firstly about how you handle VAT. I think that's my first thing. How would you price for VAT? Because that is quarterly bookkeeping, done quarterly, and you have to report at the end of it. So it's very similar for that methodology, I would say.
I know that Xero have recently produced something about their approach to MTD, so please have a look at Xero's website or go and have a chat with them. They're over here somewhere. In a nutshell, I think what you need to decide, and we very briefly touched on the idea of ideal client earlier, and I think we can bring gold standard service into this. But what I would do is you need to understand what you do really well and the way that you like to work, because this is your business and you're the person who has to deliver this at the end of the day. But I think that there are going to be lots of different approaches to pricing MTD. God, I've never said this out loud. I feel like there's a lot of people, there's a lot of pressure on this one. Here's my personal view. You're going to be pricing based on you doing everything. So you're saying to the client, do not touch this. I am going to do all of the stuff for you, right through to a scale of, you are going to do everything, and I am just going to push the button on a quarterly or an annual basis for you. So there's going to be a different way that you manage your clients based on those. And actually, I think that what Xero have proposed is like 4 different packages along that kind of scale. So I think you could build this as like a highly automated. If you've got the kind of clients who are really tech savvy and you can get them using an app, and then things are coming into you, there's going to be a version of it that looks like that. But then there's going to be another version of MTD for the clients who are like, oh my God, I can't believe I've got to give my bookkeeper all this stuff and do this quarterly thing now. Those are going to need a different approach. So it's going to come down to thinking, who are your ideal clients and where do they fit along that scale? And then to support them and maybe ask them, educate them. This thing is coming. I want to help you, but I want to just get a feel of what you think is going to work, because then you're getting them involved and giving you feedback, and people buy in really well to something when they've been asked for their view. So I would ask them. We actually suggested to one of our clients to send a survey out to her client base and just say, like, how do you feel about this versus this? But then you can build the service out that's going to work. Then you can price it based on what you know about how intense and involved is that for you. Is it actually very efficient and streamlined and automated and low touch? It's going to have a lower fee than something that is like very heavily intensive. You're going to start doing quarterly meetings with the client and you need to chase them for lots of stuff. That's going to need you to charge more for it. So sorry, that's not a very simple answer, but I think it's going to be on that scale and then pricing accordingly.
Right, well, that's us done now. So thank you so much for your time today. It's lovely to see you. Thank you.